What's going on, brothers and sisters? Kunal here, Bulls on Wall Street. Holy crapola. We had the day of days in all intents and purposes in the market. It was a demolition. By all measure of humanity, it was nasty. It was disgusting. It was a little mini crash. So here's what we know, and here's what we got to do. We know that the Trumps are put in the tariffs yesterday, right? The market got rugged a little bit after hours. We opened down a few percent, and we continued on, though. The selling begat more selling pretty much the whole day. So let's just, go to the regular market hours. You can see here, right? We gapped down. We did an ORB. We had a little midday squeeze, which is the playbook. You're going to always have a midday squeeze. And then you broke back under the VWAP, and it was, it was game on, right? It was downtown Julie Brown in terms of the market. This is the type of stuff that happens in bear markets. The playbook always is gap down, follow through, midday squeeze, late day fizzle. And we got that, right? So now the question is, okay, we had this nasty day. What happens next? Look, a lot of people are probably positioned wrong in this market. Usually Trump caves, right? Usually Trump caves on this type of stuff. If you remember the 2016 playbook, it was like, he's like, tariff, tariff, tariff. And then China was like, hey, we'll buy, $2 billion worth of oranges from you. And he's like, guys, I just smoked these Asianese motherfuckers, okay? We've done great. They are going to be purchasing so many beautiful items from the great people of America. You guys are going to become craftsmen like the old Navajo Indians. Now, I'm not talking about the Indians with the little dots on their foreheads like my good friend Kunal Desai. I'm talking about, the old ones with the feathers and the bows. So it's fantastic. It's great people. We told those Asianese people who's boss. It's the people of America. So usually he caves. This time, he hasn't caved yet, right? So we got the follow through. Everybody was thinking he probably caves. I thought myself too. But hey, we're not in the business of, making, predictions. So what I thought doesn't matter, right? The playbook is the playbook. So the market followed through. So the question becomes, where do we go? So we're basically at these September lows. I would not call that a major support, right? That's a jerk off circle jerk support. What I mean by jerk off circle jerk support is that in bull markets, the traders that make money or claim they make a lot of money, they're line drawers. They draw lines on stocks. They say, like, check this out. And their stock goes over a level, and they're like, oh, my God, I made so much money. I'm epic. Check out my course, right? I draw these lines, fucking lines, right? You'll see people all over the internet. They're like lines, right? Lines are all great in bull markets, but, in bear markets, it's an invisible thing. So we're at a support, but I think that might be the circle jerk, line drawer kind of support. I think, the bigger one might be the pullback into the August lows. That would give us a, decent sized pullback here before we, run into it. So the playbook for tomorrow, look, and I don't know what's right or what's wrong. If we break under here, we may drift into this for a couple days. And I think that would give us a nice stretch from where we are. And then, we could play kind of the bounce up to here. Maybe even there kind of thing. And, before you kind of work its way back down. I think that would be the play. If we lose it tomorrow, but say tomorrow we gap down here, then I think we probably bounce back up to here before later on we kind of fizzle back out. So the play is, look, if we gap up tomorrow to 460 or so, maybe the inflation numbers or right, there's always a Friday. There's like a PMI and employment and then the Michigan consumer confidence. Like they have a handful of these numbers. If we spike up in the morning a little bit, I think then we try to fade it off, right? Maybe down to here, maybe down to here before it kind of back and fills. If we gap down, then the play is just, I think if we gap down, we got to try to long maybe back up to here, and then we kind of fade it off. So if we gap up, we fade it. If we gap down, we long it, and then we kind of sell the bounce and then fade. And then, of course, if we just open down, say we open down like 5% tomorrow. I don't know if that's in the cards, right? But say we open down 5%, we get down to here. I think that's probably a long for the day. Now, this is not for the faint of heart. So when there's too many contingencies out there. So let me just say something. When the market is above its MAs, and you're just kind of cruising up to 9, it's above the 20, it's above the 50, and you're doing this, you don't need contingencies. You just buy the dips, you play breakouts, everything works. Actually, if the market goes down, it doesn't matter. Your individual stock, if it's hot enough, it'll just go up. So when you're in this phase, you don't even have to really read the market or have any contingencies. You're balls to the wall, day trading aggressively. You're using margin, you're swing trading, you're holding stocks overnight, probably doing all sorts of speculative stuff. Now that the risk is off the table, you have to plan for contingencies. If this happens, then this happens. If this happens, then that happens. And so the expertise becomes magnified tenfold, and your skill level has to increase. And then, of course, there's extra volatility that you have to account for, too. It becomes a little bit trickier. P&L can fluctuate a lot. So you have to reduce your size, and you may even stay out of it if you're not equipped to handle this. So gap down, I'm longing up at the here, and then maybe I fade. And, if we gap up, I'm fading. And if we just have like the, throw the baby out the bathwater scenario here, then I'm probably longing because, we'd have the 9 EMA like really far. And we would have to. The other caveat is, I think with the market breadth, the T210, it's at 18. Historically, 20 is oversold. But I think with the Russell being in such a shitter for a long period of time, that 20 doesn't matter as much. As like maybe 10. I think, we've gotten down to the COVID lows, which would have been, over here. And that would have been a little bit lower. That would have been a little bit sub 10. So something sub 10, I think, would be just a 6 spot. Look, 24% of stocks are above their 200-day moving average. That's pretty low, but it's not as low as it's even been, right? Like you could see here, like, we've got all this here. Like, you can still get lower. But, man, think about this. If you got 12%, 10% of stocks over its 200-day moving average, that would mean that every stock is shit, right? Like, I think, personally, as somebody that trades a lot to the long side, when stocks are over the 9 EMA, they're hot. Right? Now you don't even have stocks over the 200-day moving average, so that's huge. But I think probably, I don't think you get to the COVID lows, but I think, a nice 16 to 12 on the 200 and maybe a sub 10 on the T2108, I think that sets up a pretty powerful counter trend bounce. How long it lasts, you don't know. A lot of times, you think it would just be a few days and it ends up being the long-term bottom. Most long-term bottoms come when market breadth gets so nasty, there's nowhere to go. I repeat, long-term bottoms come when these market breadths get so nasty, there's nowhere to go. And then, of course, it's usually timed with, like, some type of Federal Reserve thing and, all that kind of shit. But that's too many cross currents. So I just focus on the market bottom. And I know when market breadth nastiness, and then usually the Fed comes in around that time too. So it all will coincide together. So that's the game plan for tomorrow. So what do we trade? I think you don't have to get too cute with things. There's a handful of stocks that, we were trading all of it. I trade the indexes. I think Palantir is still on the ledge here. I think BTC is on the ledge. So, if this cracks here, this cracks its wedge right here, I think, 80,000 is a good trigger. I think we start shorting MSTR, and we short the shit out of MSTR. We could do coin, but I think MSTR is at an easy location to get it back to the 200-day moving average. I think that's pretty simple. You could do coin, something similar to that, but I think MSTR is probably got a little bit more meat on the bone. I think Tesla's still got a nice spot to potentially short. I know a lot of people will say it's got relative strength. Relative strength, dude, that's like a 1940s playbook. Like, they'll be like, oh, a stock is holding up in bear market, therefore it's good. No. historically, anytime I've seen a stock hold up a lot in the bear market, it just gets taken out at some point. At some point, somebody needs liquidity, like, fuck, I'm up money on this one, let me sell it, right? So watch this kind of wedge on this one. It's just a giant bear flag. Don't fall for any of the tricks, you know. Meta is a huge dirty pig, of course, you know. Dude, we should short this anyways because Zuckerberg's doing that jujitsu bullshit. Like, dude, anytime some 40-year-old guy starts doing jujitsu, you should get worried about the damn stock, right? Like, that's, you know, yeah, it's down a couple hundred points, but you just started breaking some real key levels here. This thing's got a lot of room to go. Yeah, you know, maybe it may not be tomorrow, but if it gaps up tomorrow, we take it down and we'll see what's going on. You can trade all the big boys, but I think this is like just a nice clean level right there that we're breaking under. If it was down 50 fucking points tomorrow, I won't chase a gap down. Once again, it's got a gap up. If it gaps up 20 points tomorrow, we short the shit out of it, and that's just the way it goes. Guys, you can just throw darts at all this stuff. It doesn't matter. They're all going to move together. Watch list building is really important in bull markets because you want to look for these hidden gems in bear markets. It doesn't fucking matter. Like, they're all going to move around together. So that's the list. I'm sticking to it. I wouldn't worry. You can do Amazon. Like, you know, it's all going to move around together. All right? I love you guys. Hey, by the way, don't worry about the markets. You know, better times are going to come ahead. You know, if this is something that's too stressful, dude, it's no big deal sitting it out. You know, let the big dogs do what they got to do. And, you know, you wait till a better time. All right? I love you guys. Peace.